following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
All right, let's talk futures. Joining me live, the co-founder of Path Trading Partners, frequent financial TV guest, co-host of Futures Edge podcast, and much more, Bobby Iaccino. Bobby, how are you?
Good. How you doing, Joey?
Pretty good, man. Pretty good. Trying to stay healthy. You know, I listened to, do you know Huberman? Have you ever listened to his podcasts?
Andrew Huberman from Stanford. Very aware of
Yeah. Yeah. He made a compelling argument on one of his podcasts I listened to that sleep is important.
Yeah, I get that.
So I'm trying to I have my Fitbit on now and I get this sleep score like every day. I'm trying to get my sleep score, up into the 80s and the 90s. I'm still a low 70s so far, but I'm going to get there.
Well, I know people actually tune into this for market talk every once in a while, but something I'll throw out to people is you get a lot better sleep when you lose weight. Not you, Jimmy, and not anybody on this particular team. I'm just saying in general, if you lose weight, you get better sleep because you breathe better. I snored for years and years and years, and I lost 30 pounds doing a carnivore eating regimen. And my snoring it only happens if I have a drink now. If I have a drink or two, I snore at night. But otherwise, I have a tiny bit of a sound that I make. And that's it. And all of a sudden, my sleep improved dramatically.
Yeah, no, that's for sure. I've witnessed that too. I have a 20-pound fluctuation in my weight. I'm from 180 to 200.
That's too much.
Up and down. Well, because I binge, right? Me and my wife will go out to eat, for a few weekends in a row and have bottles of wine, and I won't work out. And so, that causes that. Then to work it off takes longer than to add it.
Yeah. Totally agree.
Right.
I see now I fluctuate 3 pounds. If I have again, we'll do markets at some point, everybody. Just relax. But if I have a bad weekend, I'll be up 3, but then they're gone in a day or two. So
yeah. All right. I'm gonna try to be better. So any event. So but Bobby, I wanted to kind of talk to you a little bit about this idea of sentiment, confidence, uncertainty, right? These are all measures that we get from various agencies and various organizations based on surveys, but it's not based on data points. It's based on people's opinions. Right. And it seems like a lot of traders weigh this heavily.
Yeah, so sentiment indexes, sentiment indicators, sentiment data points are not the end all be all. But especially now in this particular moment, because people don't believe the actual data anymore. They think we're being lied to, especially after that big revision. We need to talk about that jobs revision of 818,000 lower. People need to understand that happens every single year. They revise it every single year, right around the same time. But also, this was the largest move up or down in 18 years. 16 years, I'm sorry. So it was a very, very, very big move. So people don't believe the data. So they go to these sentiment indexes, but then you look at some of them and some of them are critically important. For example, manufacturing PMI. I've talked about it on here before, talked about it on our live show and our podcast. It's accurate. The manufacturing PMI, despite the US only being about 30% manufacturing right now, it's a canary in the coal mine. It is a leading indicator that correlates not only with the business cycle, but very well with the S&P, with about a 3-month lag.
And so how does that PMI number generate it?
Surveys, purchasing manager surveys. They go out to purchasing managers. I think it's around 15,000 of them with sort of a rotating, like they don't call all 15,000 on the same survey. They rotate them for every survey. But they call and they say, have you been ordering more? Have your prices been up or down? Have you been hiring or not? And they ask them for real hard numbers. So it's a sentiment survey, but they're asking them how they feel about things going forward, especially in the forward look part of those sentiments. So it's strange because I agree with you. Like consumer confidence, that's if the stock market's up, consumer confidence is up. It's kind of a BS data point in my view, both Michigan and the conference boards, and even more the conference boards because it's like 2 months old by the time we get it, and then it gets revised one time. So that second revision is about 2 months old. So we're looking at the July figures right now. I'm sorry, the June figures, the revision of the June figures. We just got the first iteration of the July figures recently. So I think you're right. I think data is more important, and especially from a component of if you're watching the Fed, you want to watch data because the Fed has not talked about PMI, for example, as much. They've talked about the employment cost index. Employment cost index is the best labor indicator, in my view. Wages indicator, I should say.
Yeah, I mean this delayed data. I mean this old stale data. We have the second estimate of the second quarter GDP tomorrow, I think.
Yeah.
I mean that's
So
like
we're
a
1
million
month
years
from
ago.
ending the third quarter.
Yeah, but I mean
It's
that's
going to be two more.
I,
Two more revisions.
Oh my goodness. And then you have
So
the competition. You have the competition with the GDP now and the New York Fed forecast, right? And
yeah.
they're trying to be ahead of the curve, saying this is what it is now. And man, it gets, what's the real number? Where are we? What's the real temperature?
And that's actually why I like to point to correlations of data to what we're actually looking at. All right. Now, I just mentioned manufacturing PMI. There's a 3-month lag. So, how does that affect the trade you and Tom are looking at in the show before this one? It doesn't, right? It just doesn't. So, when you're looking at this data, it's only applicable as to that day's reaction to that data. So, we talk about non farm payrolls. Something that I've seen, and it's got about an 85% certainty. Mike and I, Mike Arnold, I mean, not Mike Burke, we researched this together years ago. And it was somewhere in the 80% range that the first move after non-farm payrolls is not the last move. In other words, if you immediately drop after non-farm payrolls, you got about an 80% probability of coming back to unchanged. It's a much lower probability of going to positive on the day.
Yeah.
But the first move is usually the wrong one because it's the emotional move. And that happens with a lot of data. Now, I need to throw a caveat to all of you guys who are about to trade against the first move of non-farm payrolls. You better have an actual process in place because when in that 20% where it doesn't flip, it continues and it'll crush you. So don't just go, wow, it's paused here. I'm going to buy it if it's a down move, or it's, the rally is slowed, so I'm going to sell it. If it then accelerates, it's usually a big move. And also, I haven't looked at that data for about 5.5 years. So it could have changed since then. It could be down to about a 60%. But watch that as you guys are watching the things you like to trade. Watch the first move after the data that's important to you. I'll point out crude oil, right? This morning we get the EIA, right?
Yeah.
Build or draw versus expectation is the first move. And that move usually lasts the day. And then the next day, it's refinery utilization, and that lasts through the end of the week. I've talked ad nauseum about refinery utilization and what it means. And I don't know if I've done it on this show, but refinery utilization is basically showing you the demand on the ground this past week. Okay. A refinery's trying to ramp up because there's been more demand for crude oil, or I'm sorry, distilled products, gasoline, jet fuel, several other kinds of distillates, tar, right? Has there been demand? Think about just those three things I mentioned: gasoline, jet fuel, and tar. All of that is economic activity. It's positive economic activity. So when you look at refinery utilization, anyone can do it. I'll do it up here on my other screen while I'm talking to you guys. You just go into, I use DuckDuckGo because I don't want to be tracked, but you can go wherever else you want to go, Google, Microsoft, I don't care, at AOL.com. I don't care which one you want to use. Type in refinery utilization rates, and you want to look at the weekly data. All right.
By the way, by the way,
Yeah.
I'm trying to. Do you know Carolyn Broden, Fibonacci Queen? She's my age.
I
She's been
don't,
around
but
for.
I'd like to, if you can make an introduction.
Well, I wanted to reach out to her again. I haven't talked to her in a long period of time, and someone gave me her email address, and it was an AOL account, and I'm like, this can't possibly be right.
You know, the guy who taught me technical analysis prior to Mike Arnold refining the way that I look at it, it's a guy named Todd Kobayashi.
Yeah.
And Todd was half Irish, half Japanese, and I worked with him at Nico Securities in the early 90s. And he taught me basic technical analysis, showed me things like the defining point of a trend line, et cetera. He still has an AOL account.
Wow. Him and Carolyn. Is he the Kobayashi letter on Twitter?
No, he's not. But he
That's someone
also,
else.
that
Okay.
Kobayashi name is like Smith,
Okay.
you know, here in the US. Like,
I
you
gotcha.
guys remember what's that movie, The Usual Suspects? Mr.
Oh yeah.
Kobayashi was in that. There's the
Yeah.
Kobayashi
Yeah.
Maru, all kinds
Yeah.
of things. But anyway, you
Yeah.
pull up and you'll get the EIAs. For some reason, this isn't loading as quickly as it normally does. Probably because it's just it was just released. But you'll
Yeah.
get EIA's weekly refinery utilization table and go all the way down to the bottom. And the refinery utilization number, it looks to me like there was a draw. The refinery utilization number that you want to look at is where it is relative to 90% and where it's been relative to 90%. Is it increasing or decreasing? So again, for some reason, this is not loading. So I'm going to try again here.
So, well, let me ask you this question then. So, with respect to the EIA's report on inventories and reports on pretty much all this kind of data that we're talking about, refinery utilization, are those based on actual data that they get, or is it based on a survey of up or down?
It's both. This particular number is both because they try to blend what percentage they're hearing versus what the production of data they're seeing is. But I would say it's mostly a sentiment index. But the way you look at it is refinery utilization. We consider refineries to be operating at full capacity at about 95%. Why is that? Well, like anything that involves machinery, something always breaks. Something always needs maintenance. When I worked at my family's Italian bakery that we opened in 1977, started working there when I was 14 years old. Every Sunday, my job was to grease the mixers. So I would take this grease gun, click it on the little input valve, and grease the mixers until grease squirted out of the joint to make sure there was enough grease in the ball joints. And you had to shut the mixers down to do that. That happens in refineries too, right?
Yeah.
So 95% is what we consider to be full capacity. Wow, the EIA's website is just really slow. So I'm not going to be able to talk about where
I could tell you the inventory, the crude inventories was 846,000 draw.
Well, there you go.
So less than forecast a little bit. And then at Cushing, that's another question I'm going to have for you. 668,000 draw as well. So they're measuring both Cushing for some reason independently, and then just the total overall inventory.
Right. So I just pulled up the summary of weekly petroleum data for the week ending August 23rd. Everything you said is on here. There's a PDF that they put out that gives you a summary. And the first paragraph of that PDF, okay, you get refinery utilization. And it says refineries operated at 93.3% of their operable capacity last week. So we're on the verge of synthetic full capacity for refineries in the US. All right. That shows demand for crude. So this rally that we're seeing on your crude oil chart right now has a strong probability of sustaining because the refinery utilization number is so strong.
So mission control. Okay, yeah, we popped it up there. Let me just kind of put a circle around. This is when the number was released, right there.
Yeah.
Right. So that's the candle. Buyers came in, pushed price up. Right now, we're trying to go, break through VWAP, a bunch of technical indicator stuff, but we have a second green candle possibly being born right now.
Yeah. So as you see this kind of thing, when you're seeing these refinery utilization numbers match up with whether there was a draw or a build, that generally, excuse me, all else equal. You always have to talk about all else equal, right? If we get some sort of like ceasefire in the Middle East, we'll get a drop here. Get some sort of news from OPEC, we'll get a drop here. But all else equal, you'll get a continued bid when you get a draw plus a stronger refinery utilization rate number. Now, I think the number was, don't quote me on this, but I think it was a 90 handle last week. It was like 90.3 or 90.8 to jump up to 93.3. But like that shows demand on the ground. Now, if you guys look it up later, because the website's just not responding, I just got an error message for the EIA's website. So I think there's a lot of people like me trying to confirm that that number is right or wrong. But that's a good number for refinery utilization rates. So if I had a pattern, which I can only see if you have a daily chart up. Is this a daily?
Yeah, no, I'll put one up. I just wanted to show the release, the
move,
the price action at the move, right?
So I don't have a pattern other than that longer term double bottom, which needs to break that peak. And I haven't measured out if the targets work there, but it needs to break that peak in order for me to have a trade that I would actually get involved with.
Yeah, so I feel like, again, we can go into this. These big three green candles here, that was kind of, in my mind, that was like a fear factor move, right? We had Libya, and people don't understand, Libya is like less than 1% of global production. We had other things going on in the Middle East, and everything's kind of ameliorated from there, right? It's kind of settled back down.
Yeah, and the Libya thing, that's not insignificant. They peaked this year at 1.24 million barrels per day. I don't know why I do the decimal on that. And as of the shuttering of their operations, which was threatened, I haven't been able to confirm through my contacts whether they actually shuttered operations or not. They're at about 1,170,000 barrels a day. So that's what we'll be losing, okay, if they're actually shuttering like that. Now, there was an Air Force general yesterday, and I'm going to find his name for you in order to be thorough, okay? But there was an Air Force.
By the way, I think Italy's up to 180,000.
You think what?
Italy is up to 180,000 barrels today.
They are just pushing that production. By the way, I bought a lot of Italian shirts that I want to break out on this show, but I wanted to ask you first. I decided to lean right into this since everybody loves it so much. But anyway, Air Force General C.Q. Brown, he's chairman of the Joint Chiefs of Staff. He spoke to Reuters on Monday, and he said that there's been a mild cooling in the geopolitical state in the Middle East.
Yeah.
And his exact quote was, how Iran responds will dictate how Israel responds, which will dictate whether there's going to be a broader conflict or not. He said there were two things that needed to happen. Number one was a response by Hezbollah, which happened, and Israel intercepted it. And Hezbollah said they're not really doing more as of right now. And then CQ Brown goes out there, talks to the parties involved, and says there's a calm right now. So that's number one. When you have a conflict in the Middle East, everybody who trades crude oil, which I trade it almost every day, you need an actual oil producing country to be involved. So for example, if Italy were to get involved in this particular conflict, doesn't matter for crude oil with their 180,000 barrels that they're producing. By the way, most of that is from their hair and their skin. It's not from actual oil wells. But you're talking about Israel has no oil. Gaza has no oil. Libya has oil, but Lebanon doesn't, which is where Hezbollah is. So you're not looking at any sort of oil producing country getting involved. Now, Iran, 3.4 million barrels a day at their peak.
Yeah.
So if they get involved, you can you can almost bet that if they get involved in a big way, Israel will target their economic strength in one way or the other. So,
Yeah, and this is and then so the it's kind of, the WTI crude oil, it's highly correlated. So that price is going to be impacted when that
right.
happens.
So you have to have an actual disruption now. And the markets have gotten sophisticated enough to understand that if there isn't actually a disruption. So we can use copper as an example too. Do you have a copper chart handy? And this will relate to what we're talking about with oil.
Absolutely. I just have to squint a little bit to find it, but there we
No
go.
problem. Copper, we recently had a strike, okay, at the London Mining Corps. I think it was called the Casa Cerrones mine. And there was a strike, and they reached a deal yesterday. And you can see a little bit of a sell-off today because they reached a deal. But look at the 3 days prior. It was about a 4-day strike, right? That's actual disruption when you get a strike. Now, it wasn't a giant mine, somewhere in the range of 160,000 tons last year of copper. And another mineral that I can't really, I think it's called, doesn't matter. I'm digressing a lot today because I just got my first espressos in.
All right. So now that we're in copper, let's take a peek. I mean,
let's.
We're above four. My line in the sand was 420, 4.2. And what am I doing here with my mouse? And we've been above that for this is kind of an area of support, right? So I'll just draw really quickly a rectangle of area of support right here, and this Dr. Copper business.
Yeah,
I'm beginning to lose faith in that.
Dr. Copper is like a Chinese medicine holistic healer now, not like an actual physician, like a chiropractor. Or a podiatrist, someone that didn't actually go to medical school. Yeah, they know a little, right? By the way, Dr. Copper is one of those market cliches I can't stand. They just rub me the wrong way. Am I allowed to give a trade here, like an actual trade that I might do? Or is that kind of running afoul of compliance?
Hey, all right. So I'll just say past performance not indicative of future
Number
results.
one.
And
Number
folks,
one.
don't
Number
follow
two,
along blindly on this.
If you're not somebody that manages your risk properly, don't do this trade. If you're not somebody that operates with stops, do not do this trade. Okay. And if you're not somebody that understands the teachings of a Mike Arnold, don't do this trade. All right. And I'm serious. I'm seriously warning you guys. You don't have the 200 simple on here, but today's low touched the 200 simple and basically
I'll put it on.
Bounced off it. Okay. The 200-day simple.
Yeah. Hang on.
The line near the highs is the 50. Right, Jimmy?
Hang on a second. I'm too old to do two things at once.
That's all right. You're fine.
All right. So let me just go ahead and I just put the 200. You said 200 simple, right?
200 simple.
Yeah, that's the gold line. So I have it color coded. The faster ones are red. So red is the 8 exponential, green is the 21, and then the purple is the other one. What is it? 50.
Yeah, it's the 50. So
yeah.
My 200 and your 200 looks a little bit different, but it's okay because it's the same point. And that just could be because of inputs from different systems, and some include the overnight sessions and some don't. It's not important.
Yeah, and I back adjust data. So some people don't.
Yeah, I don't. So when you look at it, mine, the low is the 200. Yours is the level that copper is struggling to close above. Those are both critical. Okay.
Yeah.
We also have the rotation zone, which you know what that is, crossing higher. Okay.
Yep, right
and
there.
starting to, it's not there yet, starting to angle up and widen out. All right. Yesterday we tested the 50 and we closed below it. So you would expect to pull back today. Right.
Yep.
If you look to the left, you have what Mike Arnold and I call a clear path. Okay. So what is a clear path? Multiple consistently colored candles, same color. Okay, so I'm going to give you the range of where those are. They start on July 15th and they end on July 24th. They're all down red candles with no interruption. Okay, again, starting on July 15th.
So hang on, let me go back. Let me adjust this a little bit so
Yeah.
people can see it better. Hang on a second.
There you go.
So
Starting on July
15th,
15th.
That's about right here.
Right
Yeah.
there, exactly. And they end on July 24th. That's something we call a clear path. And when we see price trading up into that, price has memory and it has a short memory. Or I should say its short memory is better than its long memory. Okay. So if you think about this from a perspective of somebody trading on the trading floor, all right, guys on the trading floor where I'm from and where Mike Arnold is from the options trading floor, you look at it and you say, once we hit this price, we just collapsed, right? And then we held up at this price. So I'm not going to trade in that particular price area because we just ran and it wiped me out, right? And traders, whether they know it or not, subconsciously still think that way, right? So when they see a rapid move, like you see again that move that we pointed out from July, I don't even remember what I said.
Yeah, I
From
think so. I'll put a trend line there so we could I'll just put a channel. We'll just channel
that's basically 13 sessions where we just went lower, right? Somewhere in that range. I may have the count wrong here. As a matter of fact, I'm positive I have the count wrong. It is 8 sessions where we just went lower. All right. If price is able to get up in there, okay, close above the 50, hold the rotation zone, fail against the 200, or I should say, rise off of the 200, you have a convergence of factors that say we're likely to get somewhere near the top of that space. Now, I would tell you that right around, let's call it 4.5070, okay? That's going to be a 4.5. Did I get that right?
No.
4.5310. I'm sorry. I don't have my glasses on. I just don't want to show you guys what I look like with my glasses because I'm that vain. So it'd be about 4.5310. If you put a horizontal line there, that's going to be a reasonable place to say that it's going to get a little harder for copper to go higher from there. Okay. Now we also have a really good stop level here. Okay. We have the lows on August 23rd and August 22nd, right in that area. So you did a really good thing here, by the way. You drew a box there because I would put my stop somewhere below the lower line of your box right there, your rectangle. Not the upper line, but the lower line. I'd have my stop somewhere below there. Okay, because I like to give those sort of support areas a little bit of space. But if we can close above the 50 after retesting the 200 like this, then the rotation zone is going to angle up even more sharply. And I've got that area of space that I'm going to trade into. I'm going to go long copper there. But remember, I will put my stop before I put my entry.
Got it.
Right? Because anything can happen, especially we got PCE on Friday, right? And then next week, you're going to have a rash of Fed speakers and they could turn copper around. You could have any sort of positive supply shock, which will turn things lower. We're going to have some Chinese economic data, which can turn things lower. So do me a favor, do not take this effing trade if you're not somebody that controls your risk. Because I'm not even going to talk to you guys anymore if that's what happens. I'm just not going to say these things anymore. But you have a real good potential setup.
We are up against time, Bobby, and we have back-to-back speakers after you that are also equally as interesting. So I want to let everybody know the best way to find you, because you're out there, man. You're on Twitter, you're in other places.
Yeah. Twitter is Bob_Iaccino. Last name's on the screen. That first letter is an I, not an L. Recently had someone spelling my name wrong that I've known for about 25 years with an L instead of an I. So it's Bob_Iaccino on Twitter. And then the Futures Edge show, you can find it on YouTube, Rumble, Spotify, wherever you want to find it. It's out there. It's gaining steam rapidly. So you should subscribe to that. That's where the Doomberg podcast that we did last week is going to cover all this energy stuff. That's out right now.
Awesome, man. Well, I appreciate your time. We'll make sure people get over there to check it out because I do all the time. So thanks again. Looking forward to talking to you soon.
Yeah, apologize to Michael for the time creep that I just did here.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.